Hello investors and traders, today I'll speak about the stock market, main indexes and the rises in the US banks. So of course, let's start with the S&P 500. We see a slight decreasement today. It decreases less than 1%. So actually now the S&P 500 traders at the same level as the beginning of the year. So all this growth that we saw in January and February, now it's just nothing. So we know the situation with the US banks, the Silicon Valley Bank. Also today we see a very huge decreasement in other US regional banks like Western Alliance Bank, Bancroft First Republic Bank, and Peck West Bank Corporation. So the reasons are the same. Most probably, to these thus banks took too much risk, and maybe they face some difficulties in the future weeks. So my view is as previous, as I told you, on the S&P 500. Look, it was the first wave, the second, the third, the fourth, and the fifth. So still, I'm expecting to see the main US index a little bit lower. So using the Fibonacci, I can tell you my target. So look, if it was the third wave, so my target, actually the final destination, yeah, is about 32 18. So in this case, I'm expecting to see the index, of course, lower. That's one of the reasons why I'm not heavily buying stock, not buying growing stocks. I prefer some bonds and some B2C Bitcoin. The Nasdaq is the same. Also very hard to find drivers to grow. Today we see the US, the Brent, the oil price also decreases as a risky asset, but my target is still here, the fifth wave. It's higher than 120. The Bitcoin, the B2C, today we see an impressive bounce. Today it's up more than 20%. My target is still 30 kilos. So in this way the potential growth is 35%. So today it's like a defense asset. So today it's show a very impressive growth. We also would like to pay attention on the VIX, the index volatility. The volatility index of S&P 500. So today it's jump more than 12%. So a lot of risk in the market. The interest rates are still very high, very elevated. Now it's very close to 5%. So it's a huge problem for the stock market to grow. And the TLT, my strategic investment for this year, I told you a lot of times. Also, I made a video with my invest plan for this year a few months ago, and TLT, and I explained that TLT is my main investment for this year. Of course, it's down very significant from its highest level. It's now down more. It's about 40%. Don't forget that the TLT is the US Treasury bond ETF, also pay nice dividends. The dividend yield is more than 2%. And my final target is 120. So in my mind, the bond market, the US Treasury is one of the safest assets in the whole market. And we see today it's supported by the trading. US government bond for the 2 year is now only 4%, and the 10 year is 3.5. So the inverted yield curve is now, of course, it's still the yield is inverted, but the difference between the yields are becoming less and less. So it's also maybe a good sign for the market, but no, not yet. Also, let's have a look on my model portfolio for this year. So look, we have TLT, B2C, Amazon, and Disney, 4 assets. The weight of for each one of them is 25%. And of course, look, the TLT give us about 2%, the B2C more than 8%, Amazon and Disney also slight growth towards at this for now. Today the date is 13th of March, and the total performance of this portfolio is more than 12%. For a comparison, we see that the S&P 500 is now this performance since the beginning of the year only one. So I think it's a very nice figure, very nice performance. It's past only 2 months and 2 months and a half. So in my mind, of course, it was constructed very correctly. Don't forget the TLT, the ETF bond for treasury, is also paying you a nice dividends. So if we may add here a dividend yield, of course this figure would be much higher. So anyway, I think 12% in such a volatile market, I guess it's a nice performance. Let's come back to the S&P 500. So we see it's still today it's down about 1%. So generally, I told you my view, my position, and I'm expecting to see here it's at the lower border of this decreasing channel. By the way, it's expanding leading diagonal, so it's look very organic here. So now the two main reasons, even three main reasons why I'm not heavily buying stocks. It's the first one, I told you, the inflation, high inflation, the CPI in US now it's more than 6%, the interest rates, hiking of US fund rate maybe 5.5, maybe up to 6%, so it's also a huge issue for the stock market to grow. The next one is of course the inverted yield curve. It's reflected here, the 2-year 4, the 10-year is less, so it's also a problem. And generally speaking, we now the last days the crashes and collapse of US banks. Most of them, of course, invested in startups, in venture capital, but anyway, it can be significant issue for the whole stock market. So if you like my channel, of course, press the like button. Don't forget to subscribe, and see you on the next time. Bye.